Good evening. Ira Epstein with your metal market wrap-up. And this wrap-up is for the evening of Thursday, the 6th of October, 2022, 6:40 p.m. Central Time. Well, in the gold, holding back down here at 1720, silver 2063, copper market down about a penny and a quarter. The dollar soared today again. So there's a market up 117 points. You're sort of flat tonight going into tomorrow's all-important jobs data. You kept a bid in the energy markets, and what the market is now counting on is that as China comes out of its malaise, gets past the party Congress, that they will start firing up their engines and demand will come from them and put this market and the Brent back over $100 a barrel and maybe even meet what Goldman was hoping for, the 1.25 area. I don't know. We'll see. We'll see how bad the world recession goes. If the world recession is there, China on its own, I don't think it needs all that energy. It needs it if they have business, no question about it, and that will drive that engine. So let's, if we could, take a look and see what the market is offering us. And by the way, thank all of you for attending. We had a very fast-paced webinar today, covered a lot of stock ETF charts galore. Got to find a way to mix the commodities in with it a little better for that. I think I did a good job. It was fun. I enjoyed it. Okay, in the gold market for the week, come on, you're up 3%. That's impressive. The market is looking right now, though, after that 3% gain, it's starting to chug along. Well, why not? What is tomorrow? Tomorrow's a big day. The market, you saw in the stocks, tumbled into the close today. So the market is looking for jobs data numbers that are going to be strong. They think they're going to be over 250,000. I've even seen print talk of as much as 300. The surprise would be 2.25, 200. It's still good growth, don't get me wrong. It's not going to take the Fed off the path. You'd have to get a job growth with a 1 in front of it. In other words, 100 and some odd thousand jobs. And I think that would get everybody's attention that these Fed rate hikes have really taken the bite. You're not at that point, in my opinion. Do I know? Nobody knows. We'll see the number tomorrow. When you look at the gold, it has had a nice pattern of higher lows, higher highs. The market is now over the 18-day average, which means if it breaks tomorrow, I wouldn't be surprised to see that is the support area. What if it rallies? Well, if it decides to rally further, the Bollinger Band is waiting for it, the 1738.80 zone. If you cleared that, then you're up to the 100-day average. Okay, momentum, you're overbought. Not the best place to be. An overbought market, knocking on the door of the Bollinger Band and then right over at the 100-day average. But right over it, we have to understand, still $30 away. That's a big move by any stretch of the imagination. So going into the report, the bulls are in control, but again, overbought market, and you have no idea the impact that's going to come off the jobs data. The gold-silver ratio continues with silver staying stronger than the gold, and you see it on the charts. Number one, it's fighting at the upper Bollinger Band. I can now say the market is caught, at least going into the report, with the Bollinger Band resistance, the 100-day average support. If you take out 1998.5, I think you'll be at 1954.10, sort of like that. That's what I would guess the market would do. Is that bearish? No. Because you'd still be over at that point, the 18-day average of closes. Again, an overbought market. In the copper, you got close enough to that 18-day average to say it's time to come out. Take a look at what the market did. If we come here together, I'll bring you right to this. Let's get to there we go. So the market got today to 356.80. 358.80 is the number. It's still 200 points away. Do I think that's close? No. I think it was okay. It's just a failure day where the market didn't hit that objective. Now, what the market did hit, for those of you that get my morning subscriber video, were the window envelope numbers. They were the key to the market, the combination of those two. And the market is now, if we take a look, let me come back to today, just trading at what? The line in the sand, the 18-day average of closes. I'm giving the bias to the upside, the bullishness to the upside. But if you're a buyer at 342, I said it in my morning review for my subscribers, and I'll say it to you. There's no edge here in taking nearly a 9-cent risk at $250 each penny. It's $2,000. I'll let somebody else want to own that. Palladium and platinum, very interesting. South Africa is now installing massive amounts of solar panels. I'm talking farms. And what they have said is they can't count on the energy grid in South Africa to operate their mines. So they are building at great expense swaths of these farms. Why? They'll be able to run the equivalent of cities with all the power they're generating, and they need not worry about what goes on with the grid. How far away are they from getting this? They have a French firm doing it. It's happening right now, 2024. It'll be fully operational. That's impressive. So what I had told you, part of the reason you've got platinum and palladium prices that have come up into resistance points of their Bollinger Bands is the lack of energy. And that lack of energy hurts the supply. The demand stays constant, not soaring. Now you got another problem. The London Metal Exchange today opened up for discussion as to whether or not they want to take on Russian metals. Maybe they stop allowing that for delivery. That's going to change the whole complex of the London Metal Exchange, big time. And it changes pricing in the world and many other events. They have given until October 28th as their date for comments. They'll make their decision afterwards. You know, China just keeps making things worse for themselves. And this will impact the big companies in Russia because nobody's going to want to buy their goods if they can't hedge it, can't do something with it. It just becomes a dumping zone. But where? When you come to the December dollar index, either side of the 18-day average. So we have a market that corrected, went back to what I call that line in the sand, held it nicely, and it's trying to figure out what to do. Now, tomorrow, how my day's going to start out, I know first thing in the morning, I'll be looking to see before the jobs data comes out, I'll be talking to my subscribers, prepping them for what it looks like at the last minute, everybody's looking for how the markets are going. You can see already the traders are bearish. That's why you broke the stock indices at the end of the day. We'll cover that. But what's going to happen is I'm going to move on at 9 o'clock to the ETF trades, and that's where the opportunities are going to show up because this is before the report, that's after it. So when you get the combo video, as I like to call it, and to me that's the important thing, you get the ETFs, and they're already going to know what happened. They'll respond, and I'll respond. That is where the trades are going to come out tomorrow. So if you're interested in my videos and want to get edges like I offer, I start at 5:30 in the morning telling you what's going on in the world, open up the charts, and we're working them right there together. You see what's going on, and away we go. How do you do it? Just go to our website under Market Research, or just follow my finger here. Move it up to the top, and what you get is the combo offering. You'll see an icon, click it, it'll take you right there, it explains everything for you. It's going to be a fun day tomorrow. Get ready for it. I'm Ira. You have a good day.